You've got this, $100. It's not $100, it's $10. But you're dreaming of building some real wealth, but you have zero investing experience. And let's be honest, no retirement savings to speak of. For most people, this bill right here, it gets spent on takeout, maybe a new shirt, a couple of drinks, poof, it's gone. Gone in a flash. But what if I told you all you need to plant the seed for your financial future? This $100 could be the most important money you ever spend. Stick around because I'm going to show you the exact step-by-step plan to turn this $100 into your very first real investment, completely from scratch. No confusing jargon, no complicated charts, and absolutely, and I mean absolutely, no get-rich-quick nonsense. That's a bunch of BS. It doesn't happen. Just a clear path to becoming an investor starting today. Stick with me. Okay, the first thing is the mindset shift, the why. The biggest lie in investing is that you need a ton of money to even get in the game. You see headlines all over the place about millionaires and think, what's my little $100 going to do? It's a feeling that keeps so many people on the sidelines, waiting for some big payday that might never happen. You feel overwhelmed by the fear of losing what little you have or just confused by all the options. But the exact thought process is what separates savers from wealth builders. When I got started, I was dropping fairly large amounts of money. I was right where you are, trying to figure out how to make my money work for me instead of just living paycheck to paycheck. And the most powerful lesson that I learned wasn't some secret stock tip. It was that the amount that you start with matters far less than the habit of starting. Your first $100 isn't about hitting a financial home run, okay? It's about getting on the field. The goal today isn't to turn this into $1,000 by next month. It's just not going to happen. The goal is to turn it into an investor for life, or turn you into an investor for life. And here's why that's so critical. It all comes down to a force that's been called the eighth wonder of the world: compounding interest. Compounding interest. Put simply, it's your money making money, which then makes you even more money. Think of it all like a tiny snowball at the top of a very long hill. You give a little push with your first $100. As it rolls, it picks up more snow, getting a little bigger. At first, you can barely see the growth, but over time, the snowball gathers momentum, growing bigger and faster until it becomes an unstoppable avalanche of wealth. That's what compounding does for your money. Your $100 earns a return. Then, that new slightly larger amount earns a return on itself, and it keeps going on and on and on for years or even decades. Let me make this real for you. If you just invest $100 one time and let it sit, earning an average of say 7% annual return, in 20 years, it could grow to around $400. That's pretty cool. But what if you made it a habit? If you invested your first $100 and then just added, say, $50 every single month, in 20 years, you could have over $50,000. In 30 years, that could be over $98,000. That's the power of your starting today. Don't just wait. You're not just investing $100. You're kicking off a process that can change your entire financial life. Now we have to lay the foundation, or the before. Okay, before you get excited and rush into investing that $100, we have to cover one non-negotiable step. Think of it like putting on your own oxygen mask before helping anyone else. If you skip this, you risk taking 2 steps forward and 4 steps backwards. So you got to be careful. Get your financial house in order. I'm talking about high interest debt, credit cards, as you've seen in the previous video, credit cards specifically. I know you came here to invest, not talk about debt. But Trust me, this is critical. And here's why your credit card is likely charging you an insane interest rate. You figure 18, 25, 28, 29%, maybe even higher. The stock market, on the other hand, has historically returned around 10% year on average. You see your problem? If you invest $100 and you earn 10%, but you're paying 25% or a credit card balance, you're losing badly. And I mean badly. It's like trying to fill a bucket that has massive holes in it right around the bottom and it's all leaking out. Paying off a 25% interest credit card is like getting a guaranteed tax-free 25% return on your money. You will not find a better deal anywhere on the planet Earth. So, if you have that kind of debt, use this $100 and any other cash that you can find to attack it first. The debt is the single best investment you can make. Along with that, it's smart to have a small emergency fund. Now, we're not talking thousands and thousands and thousands of dollars. We're talking, maybe just $1,000 as a buffer, okay? And some separate savings account in a drawer in an envelope, just $1,000. This is your life happens fund, okay? Something happens, your car breaks down, surprise medical bill shows up, and see. Instead of selling your investments at the worst possible time, that's what you don't want. That's why you have 1,000, 15, maybe 2,000, depending on you. Everybody's different. Once that high interest debt is gone, you've got that small cash cushion, right? You're ready. The foundation is now built. But now we can start building the house entirely. And here's how we do it. All right, this is where it all comes together. We're going to walk you through the exact steps to take that $100 and put it to work for you. The first thing you need to do is choose an account. To invest, you need a special kind of account called a brokerage account. Just think of it as like a shopping cart of investments, like stocks and funds. Opening one is ridiculously easy these days. You don't have to go to a stockbroker. You don't have to go to a financial advisor. It's really easy. With a good company, completely free, and some companies like Fidelity, Charles Schwab, First Trade, all offer accounts with no opening fees and no minimums. You heard me right, no minimums. Now you have a choice. There's a standard brokerage account, and then there's supercharged versions designed for your future, a retirement account like a Roth IRA. Since you're starting with no retirement savings at all, this is a huge deal. And here's the simple difference. A standard brokerage account is flexible. You put money in, you can take it out. Very simple. Okay? Again, standard brokerage account is flexible. You put money in and you can take it out. Okay? A Roth IRA is a retirement account with a massive superpower of tax-free growth. You put in after-tax money, not before, after-tax money, like your $100, and all in its future growth and qualified withdrawals in retirement are completely 100 tax-free. When is that? Typically 59 and a half. But don't focus too much on that, okay? Seriously, the government does limit how much you can put in each year. That's the downfall. But for someone just starting out, it's one of the most powerful wealth building tools that you can use. So why not take advantage of it? For most beginners, starting from zero, absolutely nothing, opening a Roth IRA is the smartest move you can possibly make. Okay, we're at step 3. Basically, open the account. Now, this part used to be a huge pain in the ass to do, but today it takes about 10 minutes online. You just go to one of the websites of a reputable broker. Again, think Fidelity, Schwab, something along those lines. Trying to think, like Robinhood for its simplicity, and click, you open an account. You need basic information like your name, your address, social security number. It's no different than opening a bank account. It's free, it's fast, and it's official doorway to becoming an investor. Now you go to step 4. So you have your account. Choose your investment. This is the most important decision. You've opened the account with your $100 and you're ready to go. Now, what do you actually buy? There's a lot with that. And there's a lot to look at and a lot of unnecessary stress. But don't think too much into it. Your first instinct is going to be normal. It's going to be to find the next big thing. Okay, you hear stories about people who gambled on a small company and boom, it exploded. With only $100, it feels that the only way to win big is to take that big gamble. Let me tell you this. This is a huge trap and don't fall for it. Picking individual stocks is incredibly, incredibly risky, especially for beginners. It's like trying to find one specific needle in a giant global haystack. Don't do that. Please don't do that. So instead, for looking for the needle, we're going to buy the whole haystack, right? The needle will fall in somewhere. The best investment for beginners with $100, remember, $100 is a low-cost broad market index fund, or what we call an ETF fund or an exchange-traded fund. I know this sounds complicated, but the idea is dead ass simple. An index fund is just a big basket that holds tiny, tiny pieces of hundreds or even thousands of different companies. For example, the S&P 500 index. It holds a small piece of 500 biggest companies in the USA. A total stock market index fund is even broader, giving you a piece of pretty much the entire stock market. So you're not buying one stock, you're investing in 500 companies. Why is this absolutely the best way to start? Instant diversification. You aren't betting on one company. You're making a bet on the entire US economy to grow over time. One company fails, it barely makes a dent in your overall investment. Extremely low cost, these funds just track the market. So their fees, which is kind of expressed down in their expense ratios, they're dirt cheap. We're talking as low as like 0.02%, which means more of your money stays working for you, not paying some fund manager or some stockbroker or an investor. It's proven performance, okay? It's proven performance. Instead of trying to beat the market, you become part of the market. The simple strategy has consistently outperformed the vast majority of professional, high-fee money managers over the long haul. So who are those managers? Again, investors. You're paying them to invest your money. You're losing money right out of the hole. So remember, you can do this on your own. Some great real-world experiences are funds like VTI. That's going to be your Vanguard Total Stock Market. The ETF is like FXAIX. That's it. The Fidelity 500 Index Fund. And since most brokers now offer fractional shares, you can buy a piece of these funds, just a piece, with your $100, even if one share costs more. Okay? So you're already moving forward, and that's what we want to do. Make your first investment and automate it. This is where things get pretty important. This is the amount of truth. Transfer your $100 into a new brokerage account. Type in the ticker symbol, the ones you choose, like VTI or the FXAIX or the VOO. Enter the amount that you choose, your $100, and you click buy. Congratulations, you're officially an investor. Just take a second and let that sink in. You're an investor. You did something most people only ever talk about doing. Well, let's be honest. A lot of people talk about it, but they don't know how to do it. So that's why I'm here to try to help you with that. But don't stop there. The final and maybe the most important part is to unleash the secret weapon of building wealth. Automation. Automation. Go right back to your brokerage account. I think it's going to be over in the, just go back to your main page, okay? And somewhere in there, you're going to find out where you can set up an automatic investment. It can be 10 bucks a week, 25 bucks a month, whatever you choose to do, and whatever you can comfortably afford. This strategy is called dollar cost averaging. By investing the same amount on a regular schedule, you're automatically will buy more shares when the prices are low and fewer when they're high. So it's a good thing. It takes all the emotion and guesswork out of it and makes investing a simple habit, just like paying your phone bill or any other bill. This is how real wealth is built, not with one dramatic move, not one magic wave of the wand, but with thousands of small, consistent, and disciplined steps forward. You're looking for the path forward and the conclusion. So let's do a quick recap on this. First, get your foundation right. Okay. Lay that foundation. Pay off your high interest debt. Second, choose your account. A Roth IRA is a brilliant choice for tax-free growth. Okay. Roth IRA is a brilliant choice for tax-free growth. Third, open the account with great low-cost broker. It only takes minutes. Again, I personally use Fidelity. I like Fidelity. I think their app is a little easier than Schwab, so I do like Fidelity. It only takes a couple of minutes to set this up. Choose your investment. Don't, and please don't gamble. Buy the whole haystack with a broad market index fund. Okay? Remember, VOO, S&P 500, same thing. That's what you want to look at, not little individual ones. Make your first $100 investment purchase, and I can't stress this enough. Definitely set up automatic investments where it just pulls out of your bank account, whatever you can afford, and you don't even realize it's gone. Now you have the exact blueprint. You know more than enough to get started. That feeling of being overwhelmed and not knowing what to do is gone. This is extremely, extremely easy. Please take the time and look into it. You have a clear, simple path. But before you click away, do one thing for me. Drop me a comment and tell me, what's one thing holding you back from starting this? And I mean, starting today. Well, tomorrow. No, today sounds better. I read every single comment that I get, and I genuinely want to know what hurdles you're clearing today. The journey to your financial freedom feels long, like anything else, but it always begins with one single step. Today, with that $100, you've taken it. You've started the snowball rolling. Now your job is to keep it consistently going down the path to compounding interest, compounding and doing the heavy lifting for you. If this video gave you clarity and confidence to finally get started, thank you for watching and I appreciate it. But do me a huge favor and hit that subscribe button. I put out new videos typically every week. Hasn't been every week lately because I've been crazy busy at work, but typically every week to help you on this journey. And be sure to watch my next video where I break down the 3 best index funds for beginners to help you. Thank you for watching.